And hello, everyone. Welcome to the Real Estate Show on KMED, AM and FM this weekend. Hey, it's the last weekend of May, and we're heading into summer is underway. And hey, the weather's beautiful, and the real estate market around Jackson and Josephine County, boy, it's continuing its robustness as we enter this the summer market. Pete Belcastro and Joe Brett here, and thanks for joining us. Joe, gosh, I'll tell you, as we go into the summer, and of course, Memorial Day is the official start of summer, as you know. And man, I'm telling you, I was this week. I've been went to the Ashland meeting, the realtor meeting, went on the tour this week, and my goodness, there were like 22 on the tour, 22 homes, and the prices were, they're back to 2007 when you and I first became brokers, which I didn't think we would ever see again, but we are.
I'm having really similar experiences combing through East Medford for some investment properties, and the range that we were looking at 2 years ago and the range right now, it's like, okay, you just you need to come about $100,000 more, and know that banks are holding their own. They've got the seller's market on their side, and they're getting good fair market value for those foreclosed properties that come back.
It continues to be a seller's market, no question about that. Inventories are still low again. We've sold them all out.
It's a homeowner's market too, because your values are just rising. Your boat's lifting with the rest, as Brad Bennington would say.
And part of the reason that it continues to do what it is that mortgage interest rates, as everybody is predicting, we're going to go up and up and up, continue to kind of go lower, a little bit lower. And so Guy Giles from Ditech Mortgage is going to be along today, and we're going to hear what's going on with that. Because as long as the interest rates stay the way they are, there's going to be a lot of buying and selling going on. I mean, there just has to be until that changes. And I hope it doesn't change. But there's so many warning signs about, on the horizon in case things get out of hand again. And that's what concerns me at this point. Anyway, next week here on the Real Estate Show, speaking of Brad Bennington, the Jackson County Home Builders will be along, and we'll update you on that. Still a lot going on. We also should have, perhaps by next week, the new stats out. What do you think it was like in March, April, and May? Those 3 busy months of the real estate year. We can't wait to get those stats. I'm sure you'll be shocked at how much has taken place. Remember, Bob Gervais told we had $10 million of sales sitting in his office in 1 week.
Yeah,
they're at RE/MAX Ideal Brokers. I mean, that's a lot of sales in a week.
Moving some freight.
It sure is. Anyway, that's coming up next week here on the Real Estate Show. In 2 weeks from today, the Rogue Valley Association of Realtors will be back with us, and then the Jackson Soil and Water Conservation District. A lot's going on, that's for sure, here, as summer has officially kind of kicked underway here in the Rogue Valley.
We like the summer.
Yeah, it's my favorite time of the year right now. I love it, but it's a little warm, no water, things like that, but what the heck, it's still summer, and we love it nonetheless. The Real Estate Show here on KMED rolls along. We're going to continue right after this. Welcome to the Real Estate Show on KMED, AM and FM this May 30th. Pete Belcastro and Joe Brett, the real estate guys, with you. I'm a principal broker with John L. Scott, and Joe's with RE/MAX Ideal Brokers, and we get together with you every week here on KMED to talk about all sorts of things related to real estate. And man, I'm telling you, there's a lot of stuff going on. When you add it all together, new construction, appraising and remodeling and fixing things up, all the rentals and the property management, man, there's a lot of stuff going on. The rental market, we had Laurel Adams was on here, Joe, recently, a couple of weeks ago, and we heard about the rental market and how tight that is, and how hard it is for some people, to find rentals. And so, it's just indicative of just how much, and our listeners know this, of how much the market has changed just during the time our show has been on the air. It's amazing, isn't it? Really, it's a total turnaround.
And just to see the prices on the move again, just in such a dramatic fashion, 25% for Jackson County last year, and saw my own Southwest Medford neighborhood take a pretty good jump. So it's one to keep an eye on. If you're thinking about it, it's time to move or time to make a move, do so sooner than later.
Well, people always you miss those market trends that people want to do that. If that's what you're into,
you're on the fence. You
are definitely in the market to do that. Well, part of the reasons we say why the real estate market is so robust is that mortgage interest rates have remained really historic low. who better to talk about that with us than Guy Giles from Ditech Mortgage, who's in the house today here at KMED. And first of all, nice to see you again. We haven't talked to you for a while. You've been busy, I assume, huh?
It's been as busy as I've ever been right now.
Is that right? Well, that's good to hear. Now, first of all, before we kind of start talking about that, you got to come back to you for a moment. Ditech Mortgage, you've moved. So, change in real estate, well, change in everything, is just inevitable. So just tell us what you did. Tell us a little bit about your new company, Ditech Mortgage, and why, in your case, you decided to kind of make a move here, Guy.
Well, first of all, my old company was a great company. There wasn't anything, weird that happened.
Yeah.
I just decided that I wanted to focus on a couple of programs, which really are about 90% of the loans out there. Just your basic Freddie Mac, Fannie Mae, and then your government stuff. And that's all we do. So I had the ability to broker and do some different things at my old company, but I didn't tend to do a lot of those. So I've spent a kind of a disproportionate amount of my time working on a bunch of deals that, anyway, I'm moved now, and I'm excited to be over here.
And what does Ditech Mortgage give you? I mean, for your clients. I mean, when you talk to somebody, I ask you this: what's the difference of what you had to what you've gone to?
I think if I had to kind of sum it all up, the most important thing that would be for a client is we have basically internet pricing, but we have a brick and mortar building that people can walk into. So you get the good service of having a local person working for you, and the same pricing like you'd find on the internet. So I don't quote specific rates ever as much as you want me to, but I will tell you that we have great rates, so shop us against anybody.
Well, let's talk about those rates. I mean, what Joe, you guys have said that.
Yeah, he's
Guy's
just about
been
to ask
saying
you about
guys
the rates.
Yeah, well, you can't come in here without asking him because, you guys all been predicted they're going to raise. They're going to raise. They're going to be 5% now. They're going to be 5.5%. Going to be 6%, and they're still below 4%, for goodness sake. So, I mean, what?
I haven't predicted that, by the way.
I was not on that boat either.
I have always stood.
All of you guys now are changing your tune. No. You're changing your tune over the last 6 months.
Or someone wasn't listening very closely.
What?
Just for fun, go look at a show. I don't think that
they're on realestateshoworegon.com.
Yeah, that's right.
I think everybody agrees that rates will have to go up at some point. I think it's healthy for rates to go up at some point. I don't think we're there right now. I think it's a bunch of wishful thinking.
All right, tell us what you're doing right now in terms of rates on different for different clients that you have right now.
Well, we're again, I don't ever quote a rate without an APR, and there's so many variables that go into it. But we're in the mid to low threes on a government loan right now.
Mid to low threes.
Yes.
They've actually come down, haven't they, from over the last few months? Seriously, because they were in the mid fours, remember, not very long ago. So they've actually come down then. Yeah,
and then they're not at their very bottom, but keep in mind, too, that I now work for a company that I have rates that have been between 0.25% lower than than a lot of the stuff that I've seen around.
When you say government loans, what types of loans now are you doing where these types of 3.5% are coming from?
Yeah, and I didn't quote 3.5.
Or whatever it was.
So it would be your FHA and your VA loans. USDA loans are really low also. Yeah. So it's those three. Even though Fannie or VA isn't technically, it's not a government loan, it's still you kind of get the same rates that you would on those. It's actually a Fannie Mae product.
Now remember, it wasn't that long ago when FHA loans were seemingly falling out of good graces because they added mortgage insurance to them. Remember all that? They were adding costs to borrowers. But now it seems like the people are coming. Maybe they really never left FHA, but it seems like they've changed a little bit there.
I think they definitely steered away from it for a while because the mortgage insurance was a ton higher than anybody else was offering. It still is for the life of the loan, but they did cut the mortgage insurance down to about 85 basis points, which is a lot cheaper than it was before. So yeah, if you don't have perfect credit, the FHA is definitely a good avenue to look at.
And real quickly, what are some of the federal level factors that are keeping interest rates in check? I know we've not had the job growth, and We've had some in some specific sectors, like in our own state. Portland's seen great job growth. Medford, Southern Oregon has not, insofar as really good family wage jobs, things that can sustain themselves.
I think on a high level that there is a lot of people that, me included, that believe that the stock market's maybe a little higher than it should be right now. Probably you'll have a stock guy on right after me.
There's a lot that think real estate's a little higher than it should be too. So
that's starting to happen too.
Real estate, both are this way.
But it comes down to getting your money back, and people know that we're underwriting loans, even though they're starting to loosen up. We had a little bit of a conversation before this radio show about some of the Alt-A products coming back where they're more stated, or where you just kind of tell them what your income is. Some of those things are coming back a little bit, but I can't see them, getting popular like they were before. So a big part of it is that people know that companies are underwriting loans to tighter criteria now. So, hopefully we at least, even if the housing market gets a little bit overinflated, at least they know that the borrowers, for the most part, are good for it. They've, vetted that whole thing out as a loan process was going through.
Well, we were pretty concerned, weren't we, Joe, when I forget who it was in one of our shows in the last month or so was talking about they had clients, a client who had just said, this is my income, didn't have to prove it. And that just seemed like, you got to be kidding me, because that's exactly what we heard, which got so many people in trouble before.
Our saving grace is we have a bunch of real estate consumers out there that went through some of that are never going to go down that road again, and are going to prefer some of the tighter restrictions or things to protect themselves. I think if you got burned in that whole scenario in the mid-2000s, and still the fallout happens today, we're still getting foreclosed properties coming back on the market today. They're coming through the cycle at the end of that. My gosh, you're going to be really reluctant to get into that again.
And keep in mind that even if some of these products end up coming in, they're going to be what's called a portfolio product, or a product that a bank is just offering, and they're thinking, hey, we'll get a little bit of a higher rate, or we're going to get something for it. They're not doing it just because all of a sudden they decided we don't need to document income anymore. But the majority of the loans will be underwritten, the correct way, with all of your income, with your assets, with your job histories. So I think the market as a whole is still really strong, and that's why you still see these home loan rates, down where they are.
Mm-hmm. Well, I hope that stays the same, but it does concern you when you hear that is out there, that's even happening, because for years here we heard, my God, you got to have 18,000 pieces of proof that you do this, that you do that, and then we hear that again. But I
think a happy medium is good and healthy, where we kind of trust but verify.
I love that. Yep.
Trust but verify. Now tell people about the FHA loans, because there may be. As prices go up, okay, and we're seeing that in a lot of places, Ashland in particular, I understand that, and even Jacksonville. But when you go a certain level above certain points for FHA loans, then you have to get balloon loans and things like that. Explain that to people because FHA may not be for certain people, right? It does work.
Yeah, if you're going to buy your house in Ashland, there are limits, and it's under $300,000. I think it was $289 or something last time I looked, and I'm sorry I don't have that right in front of me. I'm really good at looking up guidelines, but don't know every one of them to the dollar off the top of my head. But yeah, there are limits. It's just like the USDA program. It's a wonderful program for where it fits, but it's not going to fit for everybody. And if you're talking Ashland or Jacksonville or some of the higher priced areas, you could go over that loan limit really easily, and that's one of the benefits, is only having about 3.5% down. So
I could get, say if I got $600,000, okay, I find a place, and I think the FHA loan, I don't know what that limit was. I thought it was like around 400-some thousand in Jackson County. Let's say it's around 470, I think, or what it was, or in that particular
417
area.
is the conforming loan limit, but they allow the FHAs, as far as how high they'll actually allow the loan to be, is lower than that.
Is there an advantage to do an FHA loan when you have a higher priced property, or does that matter to anybody?
It really comes down to, usually on an FHA loan, is your credit profile or your down payment, and that's really why people end up going. You have to go back to why that program was created, and that was created for first time home buyers. So it's not necessarily going to fit for everybody. They don't necessarily have income limits, but they definitely have I don't know. It's just you seem to fit into a little bit of a different box.
You and your $600,000 property. It's not your first rodeo. You probably bought and sold your way up.
Well,
to
you're
that.
probably not going to use. You're probably going to use a conventional loan if you need one, right? I mean, that would probably be simpler to do.
Actually, and even at that, you'd end up being what they call a non-conforming or a jumbo, which is above that $417,000 mark. And there are areas in the country where you can go all the way up to over $700,000. It has to do with the median house price, but that's not us. Might be you and Ashland, but it's not me.
It probably, it could be the way things are going. It may very well come back to that. So what's good to hear that people are getting loans, and where are these people coming from that you're dealing with down there at Ditech Mortgage? Is it
all of a sudden?
I wonder where all these people are coming from. Who's buying all these properties? Because wow, some of them are flying. Well, Bob Gervais was telling us last week here on the show. There's multiple offers on certain price properties, more desirable than others, and it's you got to be prepared and ready if you're going to make an offer, because you don't want to lose it.
Yeah, I think you have to come in strong, but you also have to keep in mind, I just had this happen to me about 2 weeks ago where somebody came in, I think the house was listed for about $160,000, and they ended up getting into a bidding war and ended up all the way up about $18,000 more than what the listing price was, and the house didn't appraise. And I had no idea that war was going on until the appraisal, and everything came in and so it turned out to be, you have to be careful as far as going in too strong on these things, but you're up against all those cash buyers, and you just have to make sure that as everybody's getting excited and as things are going up, that you don't end up going in a little bit higher than you should.
And what happens if the appraisal comes in, and we've had this happen? Say you put an offer on a place, like you say, you had to bid higher than the asking price. The appraisal comes in below it. All right. What are your options then? What do you tell clients at that point?
Well, there's really only two. Either you
you ask really nice, all right, Mr. Seller.
The option is
the seller can come down on their price.
The seller can come down to the appraised price,
or you can come in with a little bit more money,
or the buyer can just add up some more money.
Yeah,
and do it. That's what I found that clients that I've had twice now. That's what they ended up doing. Mm-hmm. They ended up coming with bringing more cash to the to the transaction, because the appraised price was like $5,000 lower than what they agreed to the sale price.
And to the appraiser's defense, it's hard for them to keep up with the market that's moving so fast and it's moved so dramatically. It really is, because they are very data driven, and that the freshest data is yet to come to them.
Well, they go 6 months back.
Right.
Okay, so think 6 months ago in December,
it's a
different market than as it is today. So.
And there's only a few $1,000s gap in the appraisal and the sales price you're talking about, but that's that's about the amount the market's moved in those 6 months.
It's true, and then by the time you go find another place, or that person goes and finds another buyer, that house may have very well appreciated a ton closer to where it is. So it's not necessarily that it's a bad buy if you go in over, but you just have to keep in mind that like you said, those appraisers are dealing with comps.
And sellers have to be aware of that you just can't, I want, $300,000 for this, and when it's really $250, and you think, well, I can get this because it's a big market. Well, if it doesn't appraise, you're going to lose the whole thing.
Your market's very narrow. It's the one cash buyer that really falls in love with your place and has the $50,000 just to throw at it.
I may come in with a few thousand more to get it there, but I'm not going to come in with 50,000 more.
Because I take that $50,000 and go buy something a lot better than what I'm looking at.
Well, as long as the market is this way, and you're right, and we hear this from all the time, that appraisals follow the market, and so they're a little bit behind. So getting the right price on the house to start with is really the most important thing. You got to price it right, and it will sell.
And real estate professionals can help you with that.
They sure can. Real Estate Show here on KMED rolls on with Guy Giles from Ditech Mortgage. This show, of course, all of our shows are at realestateshoworegon.com. Don't you dare go away. We're coming right back after this. Real Estate Show rolls on here on KMED, AM and FM, May 30th of 2014. Pete Belcaster and Joe Brett, the real estate guys, with you. Here is summer underway here. We've got through Memorial Day. By the way, Joe, you were up in Corvallis, I know. Made a speech there to the veterans group there. How'd that go? Go good for you?
Outstanding ceremony. The Oregon State ROTC Silver Talons drill team performed.
Oh, wow.
Dedicated that performance at the Memorial Day ceremony to my brother, who went to ROTC at OSU. So he was a member of the Silver Talons.
Well,
actually led that group, and
well, I was going to say, one of these, I know you've given this speech on behalf of your brother as a POW all over, but never here in the Rogue Valley.
As an MIA.
As an MIA.
Yeah.
I'm sorry, POW MIA. But you've never given that around here. You got to do that one of these days so people could come and hear the story, which is...
I'm working on that for next year.
Are you? Good.
Yeah, because
you should do
Senator Wyden and Merkley were here.
They should have heard that.
And Representative Walton, and they come pretty frequently on Memorial Day. We have some of the better with the Central Point and Eagle Point services, so I'm working on that for next year.
There's a lot of people come to Eagle Point for Memorial Day. It's
rightfully so.
Yeah, it's really cool. Anyway, so good luck with that. Hope you're able to do that here. Next week here on the Real Estate Show, Brad Bennington will be along from the Jackson County Home Builders, and we'll update you on their activities.
He's probably going to have a belt on with hammers in it and nails.
They got their big event coming up, in the fall with their home tour. Yeah. And they just finished their home tour, so their home that they build and sell. Anyway, we'll catch up with Brad next week here on the Real Estate Show. Today, Guy Giles from Ditech Mortgage is in the house talking about mortgage interest rates and all things about that. So far today, we've learned from Guy that interest rates, Joe, around 3.5% still.
The guy didn't quote
even
that.
though he didn't quote that. It's
a little bit higher than that at this point. That is the government stuff. The conventional stuff. We can still get some things down in the threes a lot of times, just high threes on that. And so anyway, I just wanted to. When
they left the threes, a few months ago, or what it was, and we're 4.5, I didn't think we were ever going to go back and see threes again. And yet here, the first end of May, here, 1st of June, they're in the threes. Go figure that out. Okay, tell us, Guy, where these people are coming from that you're working with. I mean, are they local people? Is it refinancing of homes or is it purchasing? Tell me what the trend is right now.
I have both now that I have these really good rates, and I don't know where all my refis came from, but I have done quite a few of those in the last month and a half.
They're back.
And I've never been a refi focused guy.
I know.
I'm a purchase guy, and that's what I like to do, But there are people that have equity in their houses at this point,
right.
and I, for a long time, I would never discourage anybody from doing a loan, but I'd say definitely, I had more conversations with people saying, go talk to a good real estate agent and get a good, current market analysis or a CMA on your house to know what it's worth, and that way I didn't have to tell them if they didn't have equity in their house, but they could kind of come to that realization on their own without having to pay for an appraisal. But now people are, they have equity in their house, and they're the little bit of cash out, but for the most part, still getting some rates. But if they didn't fall into that HARP bucket, which I'm going to look at for a friend of mine a little bit later today.
Is there what do you call it? Is there a limit on? I'm trying to think of loans. Is there a limit on how far I can go on some of these that you do?
As far as, are you talking about like how much?
Are you looking for a 50-year loan, Pete?
No, I don't want a 50-year loans are coming next, aren't they?
No. It'd be for a little younger client than you and I probably.
Yeah. You can start now in your 20s and get a 50-year loan and keep the house till you're 70, and the rates. The payments would be low. Of course, by that time, your property taxes would just go out through the roof over that time.
Well, I've done some math as far as, even if you're keeping that mortgage, if you're at like me on my house, I'm at a 4.25% rate.
Okay.
And after, kind of looking at it and at the end of the tax year and the tax benefits, even if you're paying in the low 4s, you're probably more like a mid 2 or a really low 3 by the time you write off your taxes on that. So
how much equity should a person have in your house before you think about refinancing it, if you wanted to do that? Is there a guide that I've heard different numbers? Well, is there a guide about that?
It's going to really depend. If you can fit into that bucket, if you did your loan, before I think it's May of 2009,
okay,
then and it was owned by Fannie Mae or Freddie Mac, you can do the HARP program, which is it's making home affordable. It's where the government came in and just said, you're not the guys that crashed this market, being the homeowner, just the regular person that may not have equity in their house, but wants to take advantage of some of the lower rates that are out there right now. So they allowed them to refinance Fannie Mae and Freddie Mac loans without mortgage insurance if they didn't have it on their original loan. So I guess it's when the thing pencils out. I mean, if ideally you want to have at least 20% equity in your house because you don't want to pick up the mortgage insurance.
So you want to have at least that, right? Because you don't want to. You would have to apply mortgage insurance back to it if you had an appraisal and you borrowed so much and you're less than 20% in equity.
Yeah, so
that would add more cost to it too, wouldn't it, if you did it that way?
Yeah, so if you're going to put a number on it, and everybody's situation's different. Yeah. I mean, there are just tons of variables that go into every deal. But if you had to put a number on that, it'd be 20. But you asked a little while ago where are people coming from?
Yeah.
So mostly California. I mean, that's. The ones that I did this morning were California people, and it was kind of funny. On the one group, they're going to buy their dream home up here eventually, but they said they didn't want to rush into buying the wrong property, so they're actually going to buy a little place for now where they can keep their dog for the next year or two. Just a cheap little place because they can't find a rental.
Yeah, not at all.
And
that's not part of it's not part of your game plan if you're trying to get here. Yeah.
They're seriously buying a house over a dog, which is cool. I would, but
and I bought a truck over dogs. So it doesn't really matter. Are people are these baby boomer retirees or are they? Tell me who they are, kind of.
Well, a lot of them are people that are able to work remotely at this point.
Work remotely.
Yeah,
online. That's a huge thing, and I don't think in our valley there's enough credit or something of given to people who are working out of their homes for other places all over the world. There's a humongous number of people doing that.
Yeah. This guy's a national sales manager, and he's able to work from wherever he wants to.
So they're coming here for, guess what? Quality of life.
Absolutely.
We have beautiful weather. My son lives, down there in the Houston area. Mark, you know how much rain they have had down there around Galveston?
The pictures down there are shocking.
And Mark's a paramedic in the Texas City area down there, and they got 13 inches of rain in 24 hours. I mean, it's unbelievable.
Seen a high school
I wouldn't live there for anything.
High school football field where just the tips of the goalposts were sticking up out of the water.
Really?
The entire stadium complex was flooded like 20 feet deep almost. It's amazing.
Yeah, I mean, we do live in a place. So people want to come here. We have been saying, obviously.
It doesn't shake.
We all know that.
Spin
all right, what else you got it coming from?
Well, it's kind of weird. It seems to come from 5 different states. California's number 1.
California.
Probably number 2 is Colorado.
Interesting. Okay. Colorado.
And a lot of that's weather related.
I was going to say a lot of that could be marijuana related, but every time we start talking about that, we all get fired up, and then we're not going to talk about that today.
Well, and it's like Idaho and Michigan and Alaska.
Idaho, Michigan, and Alaska.
Yeah, and I think the Michigan was a fluke, to be honest. Okay. I just happened to have 3 or 4 people in the last couple of months that moved here from Michigan.
I could see taking out of Detroit. But I can see moving from Detroit to a place like this.
And where are they buying? I mean, is there any particular areas that trends that you see that newcomers? And then these are newcomers. No, we always talk about the amount of new people that move into the valley every year is astounding. Just by what we see in our statistics.
Just starting.
Yeah,
I don't know that there's a specific area. People are seeming to gravitate a little bit more toward the country over the last month or so, and I haven't really thought about it until just now when you asked the question. But as far as where they're moving to, anywhere from out in Sam's Valley to Ashland, I got Jacksonville. I mean, all over the place. It's not necessarily
in town and out of town, kind of thing.
Well, and by the way, welcome to all of our visitors and our newcomers in the Valley who might be hearing the show this weekend. You can get in touch with Peter at realestateshowOregon.com.
Well, it's going to be really interesting how it evolves out. I don't know what's going to do, but there's a lot of flex.
And the most interesting thing you said in that sequence was that they are not being able to rent as an option. They're
having to buy.
You don't have a guarantee you can come here just with any amount of money, put it down and rent a place.
I'm super happy. It only took me 9 months to say something interesting. That's cool.
All right. That's the Real Estate Show rolls on here on KMED. Pete and Joe, the Real Estate Guys. One more segment to go with you here on May the 30th. Of course, this show, you can watch it at realestateshoworegon.com. We're coming right back after this. The Real Estate Show continues here on KMED, May 30th, 2014. This show, of course, you can also watch all of our real estate shows online at YouTube or also at realestateshowOregon.com. We invite you to do that. Please tell your friends in case you missed a show, because we don't want you to do that. There's this great information each and every week here with a terrific group of guests that we have, all sorts of real estate related items. Today, we're talking mortgage interest rates. We're with Guy Giles from Ditech Mortgage. And I'm telling you, Guy, it's encouraging to hear so much of what you're saying in terms of business and where it's coming from, and that it's robust, obviously. Refinancing, people are able to do some of that, which in many cases is important to them as well. So from your standpoint as a mortgage lender, like you got to be sitting in tall cotton right now.
Well, yeah, and that was, I was pretty blessed through everything. You know, I might have had a slow month or two, but for the most part, I always managed to stay pretty busy, whether it was that HARP program that came out or something. So I'm doing all right as far as that goes.
All
I
right.
think the nice thing is when people come down and sit with me, there's a different, I don't know, it's just a different vibe, the whole meeting. You know, before it was just like, oh man, we just went through this economic downturn and I had this happen to me and my house isn't worth anything, and you know, just the whole conversation was a tough one to have. And that's something that's been really nice to watch.
That's been a total change. Now people don't have that particular baggage with them as they come in and visit with you.
Yeah, it's been nice to be able to actually help people without them.
Before we get out of here, tell me about, because people get in the mail from all sorts of lenders about HARP loans. Can you just tell people when you get that in your mail and you read it, you know, from whoever it's sent, I don't like those kind of things. I would rather talk to you, but tell me what a HARP loan, why am I interested in a HARP loan?
Well, it was a program that was designed, if you remember back when the government kind of had to go in and take over. Well, just to backtrack a little bit, Fannie Mae and Freddie Mac are the biggest lenders. They've always had, are the biggest investors.
The secondary market.
Yes,
right.
And they've historically had a relationship with the government, but they haven't really been. You know, they've still been their own entity. But when everything kind of crashed, the government stepped in, bailed those guys out essentially, and then told them that they had to come up with a program to help the average homeowner. So it's kind of a program where you can come in a lot of times without an appraisal if you're going kind of through your own servicer, and you can just get a loan to just to lower your rate and take advantage of some of these.
In my particular case, everyone knows I've got an adjustable rate mortgage that's been really low.
So if it was,
is it smart for me now? Because I couldn't get a conventional loan because I was self-employed. You know, one of those situations. Yeah. Has that changed for someone like me and others who are in that situation?
Yeah. If you get that letter in the mail and you haven't done anything with your mortgage since before mid-2009, then it's definitely worth looking into if you're going to have your house. I mean, obviously you don't want to refinance if you're just moving on or doing something else, but it's a great program that you don't have to have an appraisal. You don't. There are some instances where you might want to have one if you have what's called an automated value, where the computer just generates, hey, your house is worth $200,000, and you're thinking, you know, like in this market, it might be worth a little bit more. So it might be worth it to have the appraisal to get it done. But it's if you get that letter in the mail, again, if you haven't done anything with your mortgage after, you know, since 2009, then it might be something worth looking into. There's a ton of people that did it, but you just want to go in, find out, and you know, I can help you with that if you just you know, give me a little bit of information.
You're seeing some of that, aren't you? You're seeing that kind of starting to come in there a little bit.
It is, but HARP has been popular for a few years now.
Okay, yeah.
So a lot of that has been cycled through already. The people that you know are doing the HARP.
But HARP is a refinance. Not a financing for a mortgage.
No, it's only a refinance program.
And as you said, you're seeing refinancing come back as well, and you're seeing more of those come your way as well. So
I am, and it's a lot of people, you know, with equity, but it's really a program that you should look into if your rate is above, you know, a low 4 right now for sure.
Well, it's so interesting. Every time you come in and we hear, you know, where people are coming from, where they're going, what they're looking at, and it just seems like it's just all over the place. There's no real trend. It's everything.
No,
it just seems there's no way of saying this is happening now. It's everything.
Yeah, the two biggest factors are just a lot of the regulations and a lot of the taxes and things that are going on down in California, and then weather related. People just they're getting a little bit older and they just don't want to deal with the snow or the cold weather anymore.
Well, as we know, the Valley is a place that is going to attract retirees, and we know that they're coming here, and we're seeing that, and they're buying still. That's always a good thing, and I'm really curious as the next say here we are in May, June. Of course, we got a water season coming. We're not going to have a lot of water, this summer. I'm just curious as to what the effect on rural property is going to continue to be for you in lending in terms of rural properties. I think that's going to be a market that is just we haven't even started that of what's going to happen. I believe in the run up on rural properties and their value.
Yeah, I've done quite a few. I actually had a few 30-acre plus ones over the last few weeks, and we do have some programs that don't have acreage restrictions, which are nice. The only thing you have to be real careful of when you're buying a rural property with acreage is literally 800 square foot house on 30 acres. A certain amount has to be in that house, and that's one of the problems that I ran up against with some people trying to buy from out of town the other day. So there's little things you got to know.
With the mobile home on it, I'll take the mobile home off and maybe build a house, et cetera, et cetera. Well, those are all out there.
This is a little off topic, but I will have to mention this, for my daughter, Cheyenne Giles. She's riding on the rodeo drill team tonight, and tomorrow night and Saturday night. So if people want to go out to
that's the Wild Rogue Pro Rodeo.
Yes,
that's
going on
Central Point
this weekend.
Your daughter is riding in what is it again?
She made the drill team.
Drill team.
Yeah, they'll just kind of come around and run their horses and carry their flags, and it's a lot of fun to watch.
I didn't know you were a horse dad.
Oh yeah, I wasn't planning on being a horse dad. I thought I was away from that, but then you had a daughter.
And the stories of horse dads are legendary around here. How can someone get a hold of you from Ditech Mortgage? They want to talk to you about something along any of these loans that we've talked about today.
Yeah, the best way is just to call me at area code 541-944-6987. That's really, or you can email me at guy.giles@ditech.com.
And they can also Google you and find you as well. So Guy Giles at Ditech Mortgage. Well, it's great to hear what's going on, and definitely you're showing us once again the real estate market is robust. Loans are out there, so take advantage of the low interest rates while they're still there.
Well,
that'll do it for the Real Estate Show here on KMED for May 30th. Pete Belcastro here. Great job, everyone. Thanks for joining us. We'll talk to you next week right here on AM 1440. God bless everybody.
Thank you for listening to the original Real Estate Show with Pete Belcastro and Joe Brett, the Real Estate Guys. For advice, guidance, or counsel on any of our topics, or to watch a replay of today's show, visit our website at realestateShowOregon.com. This show is sponsored by RE/MAX, Ideal Brokers of Southern Oregon, Ticor Title, All Cities Property Management, and the Jackson Soil and Water Conservation District. We'll continue our weekly quest to enhance the value of your property and to make you a smart real estate consumer when we gather every Saturday and Sunday on KMED for the one and only original Real Estate Show.